Thank you very much. First of all, I have to give my kudos to whoever put the program together, because a lot of the topics that were brought up in the previous presentation, what we're going to talk about is a way to get to those responsibilities and those duties in an easy fashion. Okay, and that's our financial condition report. So what we're going to talk about, we'll go over a background of where it comes from, a couple of the key questions we seek to solve, which not coincidentally is the very same things that the panelists brought up previously. And we'll talk about the system that we have called the CARAT system. Some of the metrics, we'll look at the statewide numbers, although in the CARAT system you can go to institutional detail at great lengths. We're going to talk about GASB, a couple of impacts that happened historically and one that's coming up. And then we'll look at some of the numbers, and then we'll finish it up. This report is directed by the General Appropriations Act. Rider 12, you can look at the language, says we have to do it by May of each year. And we'll get the financial data input to CARAT. I know some of the folks here are already leaning forward on that and discussing it. So that's where the reason for doing it. But the key questions, and you can read them there, but there's one common thread among those, and that was brought up in the previous presentation, is the strategic aspects of funding, and those aspects will affect these ratios. In fact, there are many things in the community college world that will affect these ratios. Taxable value will affect these ratios because it's a form of income. Tax abatements put in place, abatements expiring, legislative appropriations. There are any host of factors, to include strategic decisions made by the institution, that will affect these ratios. So these ratios, we refer to them as indicators, and that's exactly how they're intended. They are not a pass-fail. I know a lot of folks will look at it and go, wow, we missed that, we're failing. No, they're indicators, and they're simply meant in that guise. The CARAT system is a system we're very proud of. First of all, it was developed collaboratively with institutions, community colleges across the state. The institutions report these data. They're reconciled to the annual financial reports, the audited annual financial reports. The updates, when I say informed updates, we have a very good situation, and again, as the panelist said, that the community colleges, the CFOs and other officers work incredibly well collaboratively. In fact, I won't say we finished it up, but the actual meetings, as the chair of the Formula Advisory Committee is here, and I spoke with her, finished that up. And I can tell you, it's an incredibly collegial process where they worked well together. They may have differed on things, but they discussed it incredibly well, and you all should be very proud of the folks that you send to that, because we truly enjoy working with them. But another thing we have with them is called the Accounting Principles Committee, where the institutions get together, representatives, and we'll talk about how the data are going to be reported and align reporting so all the institutions are the same. It's very easy, even with the GASB 34 and all the structuring in that. For things, there's a lot of different aspects that can be reported differently that will not allow us to do these ratios or have any inter-institutional comparison. Because they do that, we can compare. Again, it creates indicators. I can't say it enough. Indicators. It creates indicators. All right? And here's the biggest part for you all. It's digestible yet detailed information. I know some people in the room may find a great recreational activity pouring through financial statements. It's entirely possible. I don't want to diminish that possibility. However, usually, due to the executive overload of information, you need to focus what attention that you have on something. That's what this is intended to do, okay? And give you a portal or a medium to look as deep as you want to go. If you look over here, this is what you'll actually see in the CARAT system. On the top, you'll see 7 key ratios here. We'll talk about all those briefly because I'm going to try to follow the 3 B's of public speaking: be brief, be relevant, and be gone. I am going to try to do that, especially with lunch following. And then you can pick those ratios. You can pick it by all schools. You can pick one school. You can do comparisons. If you've got a peer, you can pull all those up. You can pull them up in Excel. So if you want to do things with the numbers, or PDF, any host of ways to bring this up to allow you, with the click of a mouse, to get to those answers to the questions that have popped up. Additionally, Some of those other questions, well, how are we doing per full-time student equivalent? That's a question that gets popped up, and it allows for actual comparability regardless of size. State appropriations per full-time student equivalent. Because if you compare the state appropriations from one institution to another, to a large institution to a small, that's not very good comparison. However, when you equalize those using per full-time student equivalent, now you have some comparison. There's still going to be differences, but it gets you closer to the answer. And we have that in any host of different factors. Additionally, there are other ratios in there, and you can't even fit them all on the same screen. So you can go in, and we encourage you to go into the system and look around, ask questions. Call us, ask questions, because that's what we want to do. When we publish the annual financial condition report, maximum dissemination is essential, because it's not a tattletale document. It's not, ooh, they're doing bad, we're doing great. That's not why it's intended. People may look at that. I can't control how other people look at things. However, that's not the spirit, nor the intent, nor is it structured that way. Okay, the two big questions. And again, it was brought up in previous. Are we capable of carrying out our current programs, and are we capable of doing it into the future? To that end, we have 7 different ratios. You can see them: the composite financial index, primary reserve ratio, viability ratio, return on net position, operating margin, equity ratio, and leverage. Some of those from the for-profit world are the same name, but they're different. And we'll explain why in that case. But some of the things that you commonly hear in the for-profit world are embodied within this report. You see these asterisks right here, those are the 4 ratios that get to the composite financial index, okay, which is the single best way, at the quickest glance, how do we stand? That's the best way to do it. It's the quickest. And then, again, to get the questions going. GASB, and we talked about the environmental impacts. GASB 68 had a huge shift. In fact, we'll show you some cases where it did. And not to go greatly into it, it took some unfunded pension liabilities, or the unfunded pension liabilities, and dropped them on the books of the institution. Many of these ratios are year to year. So how were we last year? How were we this year? Well, you're going to see an incredible shift in that one year. Well, the next year, now you get more back to the same picture. And we attempt in our report to call it that. The reason I bring that up is because we have another GASB situation coming up that we think will hit not this report year, but the next, which will have a similar. It doesn't have a day-to-day operational impact on the institution, but financially it's going to affect the ratios. Well, I don't say it. It may have a very, very real impact, but not in terms of ratios and comparability, and we look at things over time. Okay, the first one, the primary reserve ratio, is how long can the institution survive without additional net position or an increase in net position? And we can see statewide, and these are statewide numbers. Institutional data, of course, will vary. And we can see that, while we're going down, we're still well above the standard of 0.14. It simply compares the expendable net position to total expenses. Nothing right there. And if you have any questions on these in detail, I will certainly address them when I finish. If you want to know how much of the debt the institution can pay off with existing resources, this is where it gets. And again, with our ratio of 0.42, we can see that we're doing fairly well statewide. Again, institutions will vary, and we'll show you some of that variability in a second, without any attribution to a given institution. Statewide return on net position, is the institution better off financially than it was a year ago? Essentially, what we would call the equity ratio in the for-profit world. Well, we see 2015, that's the year that the GASB 68 impacts took place, and you see that hit the wrong one. The difference here, and then we rebounded because it's a year to year. Okay, so when you look at that, you can see that that's the situation. Statewide operating margin, did the institution balance operating expenses with available revenue, just like the profit margin, or very similar to the profit margin you would see in the for-profit world? The standard is greater than 0, and you can see while there's one large year here in 12, you see it's stable, and while dropping slightly, but the trend is not disturbing at all. The statewide equity ratio. This is different than the equity ratio you would see in the for-profit world. This was developed by the Department of Education to represent institutions or bodies that do not normally take on debt. In many cases, the institution doesn't take the debt, the tax base takes the debt. Where in the universities, they are their own bonding authorities. For the most case, it's not them. There's 4 instances where it's the Texas Finance Authority, the Texas Finance Commission. But you guys don't. I don't believe you guys do. You may. But again, we look statewide equity ratio. We're in good position there. The leverage ratio is like debt to equity. You can look at that in very similar terms, and essentially looks at the amount of debt in relation to net position. And it gives an indication of the amount of interest and principal the institution must absorb into the future. Again, very good condition in that case. Now we look at the statewide composite financial index. How do we get to this? Well, first we take those 4 ratios that we talked about. They're indexed and weighted, and then combined to make the composite financial index. It was originally done, this was developed based on some work by KPMG, who was doing some industry standardization in that area, and this is a derivative of that. Again, we can see that the 2015 dropped off, but 16 sprung right back, and the standard, of course, is 2. Now, when we look at number of indicators met, this is a sheet that in many institutions causes a great amount of consternation. It's the only place in the report per se where the institution is named and there's analysis and based on the number of indicators met. Blue shows that 6 of the or more of the indicators are met. Red is 4 to 5, and yellow is 3 or fewer. Now, again, anytime you see a drop like that, something happened across the board. Of course, that was GASB 68. But we do see there's not an immediate rebound, so there are things going on. That's all we can say from it. That's all we want to say from it. It may be absolutely the right things are going on, and they just reflected in these ratios. And it could mean something else is going on. That's what we want this tool to be, the CARAT system and this report to be, that tool that allows you to be able to look and go, I want to look more at that, or I want to look at that, or to ask a question. The report, we publish the report, it's not very long. There's only one place where institutions are called out by name, and I say called out. You understand what I hope that we're not like calling them out, but someone may take that way. No, it's just where we name institutions and the number of indicators met. So in the end, this is a very robust system, and we would like institutions to use it a great deal more, like you to use it a great deal more, because it is so easy to use. Okay, it digests volumes of financial data into really actionable information. I could fill this room with data, and all we're going to have is a hard time walking around. But when we can create information from that, especially all of you, where overload of information is the enemy. You want to get to what you need, and answer that question. This affords you that opportunity if you use it. You can have as broad or detailed analysis that you desire. Incredibly high level of transparency. Incredibly high level of transparency. You can look at everybody's stuff. Everybody can look at yours. You can do an analysis down to what level of detail you like. And if that's not enough detail, you can call me or anyone on the staff, and we'll get you even more detail down as far as you can. However, what I would encourage you to do is get with your institutions, talk to your CFOs. Here's what I see. We've had, I think, one institution, one trustee that actually called and said, hey, I've looked at this ratio. What does this mean? And we vectored the discussion back to the institution. We said, well, talk about it. You tell me what it means. I'm not doing the books every day. And doggone it. Stimulating question, focusing, we talk about. And again, it's a formative assessment. It's in stride. It's not pass-fail. This isn't the SAT. It's not. It's to give you an informed decision as you're going forward. And there is a lag. The decisions you make today may not affect your institution or these ratios for a year or so down the road. So when you look at it as part of an indicator of the strategic aspects, then this is it. And I'll close with, you know, there's especially in higher education, you can talk about a lot of things, but there's one universal translator in higher education, and that's an S with a line down the middle. Everybody understands that. They may not know one way or the other on curriculum development or whatever, but everybody understands the S with the line through the middle and can see that impact and at least start the discussion at the same point. And with that, I'll answer any questions you may have to the best of my ability. And if you have very detailed questions, feel free to get with me immediately after. Any questions? Right there, and then I'll get that if I could. Yes, ma'am.
At what time of the year is this report available for us to review?
The report is available. The institutions will submit the data by January 1. We will have the report published by May 1st.
Of every year?
Of every year, yes, ma'am.
Thank you.
And how do we get to it? Yeah. Outstanding. Go to our website. I don't have it here, but I will ensure that the folks out there get the exact website. But if you go under Finance and Resource Planning and Financial Reporting, and you can go right down and get access to the CARAT system from there. Access to the report, historical, and all that. Now, I will make sure that they have that and add that to the slides that are posted online. And also, I'll leave a bunch of my business cards. Feel free to contact me directly, and I'll walk you straight into it.
I'll also mention that we do send a copy of that report out to all of the trustees, along with the individual institution accountability reports. Sometimes usually late spring.
Yes.
Let me ask a follow-up.
Okay. Yeah, we started in 2011. It was the first report year.
Let me ask a follow-up question. Fundamental to governance versus management, back to the first session today. I looked on the website to go to this link, and it says it's for CEOs, CFOs, presidents, and their staff. And so I would assume that the CFO and the president would share this kind of information with the trustees, and it's not for trustees to go out and go analyze themselves.
Certainly, we do not want to keep the trustees from that. We can say it's for these people. The report itself, are you talking about the report itself or the CARAT system access?
Right, but it is for, if you look at the user guide, the details there say that it's given, the password is for the college, and the college has that, and so it's managed, and I guess you get it through your college CEO.
Well, and that's in that particular case, yes, you can go to your CEO and get their password. Certainly, you know, managing that number of passwords gets a little problematic with the limited folks that we have. So we'd encourage you to get the institution. We do that quite commonly. We have another system called our interactive campus project system, and the institution has one password, but they can, and usually it has an institutional name. It's not linked so much to the person, but thank you very much for pointing that out. But again, you can go look at it. I doubt the CFO would tell you no. However, he or she may, and then I leave that to the governance side of things, I suppose. Any further questions? Folks, thank you so much for your time. Enjoy lunch.